Here's something many people don't realize. You don't need an Investec private bank account to save with Investec. Their personal cash investments are available from 100,000 Rand and designed for capital preservation. In markets like these, having a low-risk cash component alongside equities is simply sensible, particularly if you're over 55.
Tensions in the Middle East are ticking higher again this morning. Markets are watching energy routes closely, and closer to home, South Africa's political landscape is starting to shift in ways that are becoming harder to ignore. Good morning. This is Biz News Daybreak. I'm Asimenita, filling in for Alec Hogg. Coming up, we'll look at the latest developments between the US and Iran, hear why Piet Viljoen says survival matters more than brilliance in investing, Sean Peche on avoiding the habits that quietly destroy wealth, and Wayne Sussman on some rather telling by-election results back home. But we'll start, as many mornings seem to lately, in the Middle East. The standoff between the United States and Iran continues to escalate. President Donald Trump has extended the deadline for potential strikes on Iranian energy infrastructure, even as the Pentagon weighs the possibility of increasing troop presence in the region. For now, it's a waiting game, though not a particularly comfortable one for markets. Here's the latest from Bloomberg.
The president, meanwhile, is pushing back a deadline for striking Iran's energy sites. The president says he is now allowing 10 days. The newly revised timeline will stretch to April 6th. And with more, here's Bloomberg's Kaylee Lines.
This also follows, interestingly, the president just this morning, speaking in a cabinet meeting, suggested that the U.S. may not even be willing to make a deal with Iran at this point. So it does seem that we're getting, once again, some mixed messaging from the president as to whether or not it is a diplomatic off-ramp that indeed he is willing and ready to pursue. But the signal from this True Social post does indeed indicate that at least right now he sees adequate progress in talks enough that he is willing to extend this deadline for another 10 days.
Bloomberg's Kaylee Lines. The Pentagon is looking at sending up to 10,000 additional ground troops to the Middle East to give President Trump more military options, even as he weighs peace talks with Tehran. Now, that's according to the Wall Street Journal. The force, which would likely include infantry and armored vehicles, would be added to the roughly 5,000 Marines and the thousands of paratroopers from the 82nd Airborne Division who've already been ordered to the region. European Central Bank President Christine Lagarde is warning of complacency in assessing the fallout of the conflict in the Middle East. She made the comment in an interview with The Economist.
We are facing a real shock that is probably beyond what we can imagine at the moment.
ECB President Christine Lagarde in an interview with The Economist. 2025 was a record year for Wall Street bonuses. And with more, here's Bloomberg's Denise Pellegrini.
The number comes from New York State Controller Thomas DiNapoli, and the numbers show the total pool for payouts rising to $49.2 billion as profits and revenues soared. DiNapoli says the average annual bonus rose 6% to $246,900. The total pool, the largest in records going back all the way to 1987, reflecting a rebound in mergers and acquisitions, helped by relaxed regulations under President Trump. DiNapoli also cited strength in trading and underwriting. In New York, Denise Pellegrini, Bloomberg Radio.
Anthropic has won a court order blocking a Trump administration ban on government use of the company's AI technology after the Claude chatbot maker argued the move would cost it billions in lost revenue. U.S. District Judge Rita Lynn issued a preliminary injunction pausing the administration's plan to sever all ties with Anthropic while a legal fight plays out in San Francisco federal court. She put the order on hold for 7 days to give the government a chance to appeal.
And adding a strategic perspective to the situation, Greg Stubbe has been speaking about the importance of securing global energy routes. The focus, once again, is on the Strait of Hormuz and the possibility of more targeted operations, including limited ground activity around Karg Island. It's a reminder that in this part of the world, energy and geopolitics tend to move together. Here's his view.
Well, I think it's like a 20% of oil that goes through that comes to the United States. It's 80% of the world's oil that goes through there. So obviously, even though we can produce at home, that obviously impacts overall global oil rates and oil rates right here at home. We're seeing the price at the pump increase all across the country. So I think they want to get that back to normal. There's also a number of fertilizer that goes through there. Potash comes through that region, and there's a lot of fertilizer. So you're seeing impacts in the agricultural sector as well. So the president and I think the administration wants, rightly so, to secure that as much as possible. But I think once that happens, you'll see the economy kind of level back out once that there's able to move traffic through the strait.
You served in Iraq. You're an Army JAG. I'm curious what your experience in that conflict does to inform your sense of how this one is unfolding. Of course, there was a lot of complaint and concern about how that was lengthened and how there were so many different rationales delivered for it. How are you thinking about this conflict in the context of that one in which you served?
Well, I'm relieved in the fact that the administration and Hegseth and the president have been very clear that we're going in, accomplishing a mission, and we're getting out. We're going to take out their ballistic missile capability. We're going to take out their nuclear capability. And we had the intel hearing this week where I think they kind of got into some of that in the open hearing where the public was able to hear some of that. So I'm very positive about the fact that we're going to go in, accomplish the objective and the mission, and get out, and we're not going to be there for an extended period of time. We haven't put boots on the ground there like we did in Iraq in the early time in the surge. I served there from 06 to 07, which was one of the more violent times to be there. I don't want to see our troops on the ground in the country. I think having troops in the region to be able to secure the strait, I think, is very important. But we've already shown very quickly that we can go in with both air power and naval power and destroy the things that we need to destroy without putting boots on the ground.
Been reporting the president is considering or has asked for plans to possibly take Karg Island. That may or may not require boots on the ground. If the president wanted to do that and it required a U.S. military presence on that island, would you support that?
Yeah, that island is pretty strategic because it's right there by the strait, and the Iranians have a number of different assets there that allows them to put mines and those boats they use. So I could see a limited deployment just to that island to ensure that the Iranians can't continue to use that. I think that would be a smart move if that was something that we did in a limited capacity. I trust the president. I trust what's happening at the Pentagon and Hegseth to make this a limited campaign to go in and strike the strategic things that we need to strike, and then pull out and allow whatever is going to happen with the people of Iran to happen, whether it's a democracy or a republic that comes there after the leadership is taken out and they have the opportunity to have democracy there.
Now from geopolitical risk to financial risk, investment specialist Piet Viljoen offers a principle that sounds simple but is often ignored, that in markets, survival matters more than brilliance. In other words, avoiding permanent loss of capital tends to matter far more than chasing the occasional big win. Here's Piet Viljoen.
Survival beats brilliance. History does not reward brilliance. It rewards survival. The graveyard of history is filled with brilliant generals, brilliant politicians, and brilliant investors who ignored risk. Napoleon did not lose because he lacked intelligence. He lost because he ignored the risks posed by an overly long logistics chain and freezing winter weather. In investing, brilliance without resilience leads to the same bad outcome that Napoleon experienced. Risk is not volatility. It's not these prices going up every day, up and down. That's not risk. Risk is a permanent loss of capital. Building a margin of safety into your work is not pessimism. It's an awareness of risk. When engineers who build bridges over-engineer them, are they described as pessimists? Or are they simply aware of the history of previous bridges that have collapsed? Why is it different in markets where we always seem to be reaching for yield, ignoring the history of financial failures? The Cockroach Fund is explicitly a stay-rich strategy, a survival strategy, not a get-rich strategy. We accept that we will underperform in euphoric markets. That's the price of avoiding permanent loss when brilliance is superseded by risk. Risk to us is not volatility or short-term drawdowns. Risk is being forced out of the game at precisely the wrong time. In the book, Will and Ariel Durant say, Like other departments of biology, history remains at bottom, a natural selection of the fittest individuals and groups in a struggle where goodness receives no honors. Misfortunes abound, and the final test is the ability to survive. The cockroach may not be your favorite animal, but it is a survivor.
Good news from Southern Africa. BizNews partner DCC Hotel Group showcases world-class hospitality across the region. We spotlight more than 100 carefully selected lodges supporting tourism, local communities, and conservation. Here in Hermanus, whale watching and coastal charm await. Your home for the BizNews Conference 2026.
Now, staying with the markets, Sean Peche takes that idea a step further. He looks at the habits that build wealth, and just as importantly, the ones that quietly erode it. His view, successful investing is often less about picking winners and more about consistently avoiding losers, which sounds obvious until you try to do it. Here's Peche.
Jeff Bezos once asked Warren Buffett, he said, you make it sound so simple. Why doesn't everybody just copy what you do? And Warren Buffett replied, because no one wants to get rich slowly. Some wise advice. Now, Warren Buffett, for many of you, I'm sure you all know, his partner was Charlie Munger. And Charlie Munger had a fantastic clue when he was challenged with a problem. He would often invert the problem. I know Alec will know this. So let's invert the problem and say, okay, well, how do we get rich slowly? Well, let's invert it. Let's find out how do we go bankrupt very fast? Okay? And then we do the opposite. So if you have a look at what are the 4 ways where people go bankrupt really fast, they spend more than they earn, no surprises there. That means they have no savings cushion when external shocks such as you lose your job or you get divorced or some tragedy or you've got an illness with medical bills. They use high-cost debt. Okay, that's one of the reasons why I'm strongly personally opposed to microlending, but they ignore risk and diversification. And that's where I really want to focus. So now we know what we need to do. We need to save. We mustn't use high-cost debt. We must create, that'll give us the opportunity to create a nest egg, and we must manage risk and diversify. Now, one of my favorite writers is a guy called Howard Marks. And Howard Marks is a person who Warren Buffett speaks about as when there's an article or a newsletter from Howard Marks in his inbox, it's the first thing he reads. Howard Marks says the essence of investment management, and just by the way, he's a billionaire. Okay, the essence of investment management is the management of risk, not the management of returns. And he says if we avoid the losers, the winners take care of themselves. So that's what we've got to do. How do we avoid the losers? We get the odds on our side. And so that's what we at Ranmore do. We're always trying to get the odds on our side. If we buy businesses that generate cash flow, skews the odds in your favor. If you've got strong balance sheets, skews the odds a little bit more in your favor. If you've got honest management, you don't pay themselves crazy numbers and are working for shareholders, skews the odds a little bit more. And if you don't overpay for assets, it skews the odds even further. And all those little iterations means that you then get the odds on your side. The problem is, we're still going to get it wrong. And even the best fund managers in the business are going to get it wrong 30%, 40% of the time. Okay, so how do we guard against that? Well, Nobel laureate Harry Markowitz says, diversification is the only free lunch.
Now back to the political landscape in South Africa. Election analyst Wayne Sussman has been unpacking the latest by-election results, and there are a few notable shifts. The Patriotic Alliance is gaining ground, while support for the ANC appears to be slipping in areas that were once considered reliable strongholds. Small elections, perhaps, but potentially pointing to bigger trends. Here's Wayne Sussman.
There were 2 by-elections last night. Let us start with Oudtshoorn.
The Patriotic Alliance wins this ward. They won it with 44% of the vote, up from 12%. Now that's a stunning rise, and this is the PA's second consecutive ward pickup over the ANC in 2 weeks. The last time we spoke, they won a ward off the ANC in the Beyers-Naudé area of the Sana Bartman district. That's the Graaff-Reinet area in the Eastern Cape. And yesterday they won this ward. So the PA are continuing to hurt the ANC.
Okay, let's go to Cape Town.
Great. We're going to go to Dunoon, which is Ward 104, very close to the Killarney racetrack, near the Killarney Gardens area, a very impoverished part of the city of Cape Town. In 2021, the ANC won just under 65% here, which is basically 2/3 majority. So it's a very safe ANC seat. Last night in the by-election, in the by-election which just took place, the ANC won 47% of the vote. That's a stunning drop of 18 percentage points. It means that in this stronghold, the ANC fall below the 50% mark. That is a very worrying number for the second largest party in the city of Cape Town. So essentially, what we saw towards the end of last year and the beginning of this year in township areas in Gauteng, the ANC losing votes in its strongholds in all directions, that played out here in this Dunoon by-election yesterday. This is concerning the ANC. If I have to take a step back, yes, the ANC lost a seat in Oudtshoorn, but they essentially largely held on to their support and were able to basically grow because it was a smaller ballot sheet. The result yesterday in Dunoon is the one they'd be really worried about, and it's clear from Ekurhuleni, Johannesburg, Tshwane, to the West Rand area, to the Sedibeng area, now to the city of Cape Town, of course eThekwini. The ANC has a big challenge in township areas, and this is something we need to watch going forward.
And that's Biz News Daybreak for this Friday. I'm Asimenyite, filling in for Ali Cog. Thanks for listening, and have a good day.
When it comes to savings, we spend a lot of time discussing returns and interest rates, but not enough time asking why we're saving in the first place. That's the thinking behind Investec's hashtag What's Your Why campaign that's been running. If your goal is stability or peace of mind, their personal cash investment is accessible from 100,000 Rand, and you don't need to bank with them. Whatever your reason for saving, Investec understands that.